Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again at the euro currency. Well, on the daily time frame, market is still calling around the 50% support of the thrusting move with this recent swing to the upside, and as we will see a bit later, the situation is really very difficult for technical analysis, mostly due to the moments that now hold on other assets, on other trading commodities, on the gold, on the Nasdaq chart. So that's why it's a bit very difficult to anticipate and discuss the current situation on the euro. Well, first of all, I would like to tell you that market has hit the significant area of support, and in fact I prefer that market will start some pullback right from this area. Although, as we said previously in the previous research, that we a bit underestimate the daily overbought that should move market a bit deeper to the deep support, and in terms of the daily time frame, that could be even the conference support. It's around 127.40 area. That's also possible, because overbought condition makes additional pressure on the price action on the lower time frames and tends the market to reach deeper support area before showing any pullback. That's also very common when higher time frame overbought leads to the lower time frame oversold by retracement, although daily euro currency hasn't hit oversold. Still, market now has accomplished some necessary conditions for starting of the retracement. Since market has hit 50% support, that is also agreement with the intraday ABCD pattern. Today we have the chance again to see how it works. As you recall that we have discussed on the previous week that market very rare left some significant target beyond. So very probable that market first hit the target and only after that will start the retracement. That's why I was a bit nervous when I see that market has started pullback on the Thursday a bit earlier than I have suggested. That probably I expect some move from the 128 area, because this was the 100% extension. That was a bit confused me. It's thrusting move to the upside, although that was really a sign of the thrust on the intraday charts. It's a bit uncommon, and I do not feel comfortable to have the bullish position here, since the 100% extension target of this ABCD pattern on the intraday chart was a bit lower. So today we see that market first of all has stopped move to the downside, so it turns from the downward move to the sideways action. So with overlapping bars, the tight range that usually leads to some acceleration in one or other direction, and I prefer to see some retracement to get some greater ABCD pattern in terms of our weekly analysis. Also take a look that market now stands above the weekly pivot point, that blue line, and that's most important monthly pivot point, it's gold thick line. It's right here. The minimum target of this pullback is common, and this level is very suitable to get the perfect ABCD pattern, is 130.30. That is the 618 retracement resistance of that move to the downside. Okay, that's all that I could say from the daily time frame. On the 4-hour time frame, what we see? First of all, take a look that market has hit 100% extension, right in agreement with the 50% support. That is significant. Trend has turned bullish, but still I am not very satisfied with the current picture, because take a look how this price action develops. Market creates lower highs, lower lows, again lower high, lower low, lower high, lower bottom. That's again, and that high is also stands below than previous one. Want to say that this really some short-term turnaround, some short-term reversal, I prefer still to see some price action that will show the taking out this high. That will at least will tell us that the recent swing up is greater than the previous swing down, and that is very common for the reversals, whether it will be long-term reversal or short-term reversal. But I still think, and I will explain it a bit later, I suppose that if even market will show this pullback, this will be very short-term action. Well, if market will show it, I will be absolutely happy. But even taking a look at this price actions, we switch to the hourly time frame. Trend has turned bullish as well here. So if we'll take a look at this price action, this really thrusting move, some acceleration to the upside. Market now holds above the weekly and monthly pivot point. And take a look, that was really shallow retracement to the downside. Just free retracement of that swing. That some hint, some shadow of possibility that market is really intends to show some a bit deeper retracement on the daily time frame. So no more patterns, no more significant moments I do not see currently on the market. Just in terms of the swing, in terms of the price action mechanics, how market reacts on these different moves, I just can suggest that probably this could be the start of the potential pullback to the 130.30 area, because market stands at really support. It shows some improvement of the bullish sentiment if we will treat the situation from the points pivot points point of view. So it's at least some hints we have from the market. Well, and I said I will be absolutely happy if market will take on these highs, because in this case we really will have high than previous one. That will be a reversal on the intraday charts. But now take a look at some another pattern and another market. First of all, I would like to discuss with you the gold. Take a look at the weekly time frame. We have discussed this range on the gold that has been formed since market has broken out from this triangle. Okay, and that was the 18th border of this market. Now take a look what happens yesterday. That was small wash and rinse of the previous highs. That high is slightly higher than this one. That potentially bearish pattern. Take a look at this moment. This thrusting move up, no trade retracement, just single penetration of this 3x3 moving average, close below the 3x3. That was also that wasn't also the 3/8 retracement of the thrusting move. It was shallow retracement. Close above and creating the new high. That is significant. Now, if market will close below this green line, that will be the double repo sell pattern. The minimum target of this pattern will be the 50%. Sorry, maybe I do not have it. Yes, just a minute. Will be 50% support of the whole move to the downside. And that is approximately 160.90, 170 area. 1690. It's right here. So if double repo work, you can imagine what will be on the euro currency. So we should get, if gold will start retracement to the downside, that will be deep move to the on euro currency as well, I suppose. How to combine this potential retracement on the euro currency and current situation on gold market? Well, probably if gold will stand for some time in the tight range right here, and only after some days will start move to the downside. In this case, euro will have the chance to show this pullback and create the ABCD pattern that could lead to the downward move. Well, the second moment that could happen is the double repo failure, but for that we need first to get the confirmed double repo pattern. So as you can see on the gold, this could be very different scenarios, but overall situation is very potential. So it's could give you a nice pattern, nice signal for the potential trading, and could give you really nice combination of risk reward ratio and very good potential for trading on the gold market, since this is significant. Even from the terms of the weekly range. You could trade it if you are a long-term trader. The market will pull back from this upper border of this range. You can imagine what will happen. It should proceed at minimum to the middle of this range. That is also approximately the target of the double repo pattern. That first moment. The second moment, it's very significant on the stock market. So take a look at the Nasdaq index and potentially on the 4-hour time frame. Here we see a very interesting pattern. That is head and shoulders pattern. It's developing on the Nasdaq market. And yesterday's rally has failed, and market really turns to the forming of this pattern. The most significant moment is not this pattern itself, but this high on the daily time frame. If market will return right back below this area, in the terms of the weekly time frame, that could lead significant retracement to the downside, and even that could be the first sign of the potential move to the downside even deeper. If you'll take a look at the S&P chart, you will see the significant wedge pattern that is developing currently on the S&P as well. And if market will return right back below, and will move below this high, and if we will approach the classical, if we will use the classical approach of trading wedges, you will see that potential target will be around 1,100 points on the S&P. Take a look, that's also the bearish divergence is developing with the MACD indicator. So current environment on the markets is really very tricky. That's why taking a look at other markets, it's very difficult to suggest some acceleration and growing on euro currency in the medium-term perspective. Well, that's why be very careful with the markets and with the patterns that you intend to trade. Also keep an eye on the Nasdaq index and on gold, since they now have the potential patterns that very interesting for trading in the current environment, and that will be the clue for the euro currency, for the euro market, especially on the Nasdaq, since Nasdaq index a bit anticipates and go ahead of the other indexes. This is some sort of the confirmation index. So if you, for instance, have the new top on the S&P but Nasdaq doesn't support it, it means that probably this top will fail and market will show the retracement move to the downside. By these examples, I suggest you probably now understand why it's very difficult to suggest any medium-term moves on the euro currency, and how to combine different markets depending on the development situation there. So one advice that I could give you in these circumstances is that stick with the clear patterns. So if you have some clear pattern, trade it, but try to not enter market when you have some blue perspective or any, and if you do not have any significant context to do that, since currently market is very tricky, and the political events and speeches and other information, fundamental data that comes from the market really could shake it. As you understand and you know that, that's a lot of instability currently on the markets, because a lot of money now inflow as from the European Union, as from the United States, and the assets change their price, since too much money now in the turnover, but the number of assets do not increase at the same pace as the money supply. So the market now is changing, I suppose, and that could lead to some significant changes in all significant markets, commodities, stocks, currencies, bonds. So just keep an eye open. So good luck to you. I suggest that we will continue to take a look at these patterns that we have discussed, and in the short-term perspective we know what to do, we know our trading plan. keep an eye on the development of the intraday charts on the euro, and we'll see, will it be the retracement to the 130.30 area, and will we get our ABCD pattern as we suggested that could lead us to the 125 area.